Yeah, that's a great question. And the answer to that is profit, because profit is the invisible hand that drives everything in the marketplace. And a lot of people get confused about how price discovery works. And I like to compare it to like when you go into the grocery store. When you go into the grocery store, you don't make a bid on what you want. You don't go in there and start having an auction on different items. The producer sets the price because the price is set at the margin. So the producer is the one who incurs the cost, and they have to cover that cost. And if they can't cover that cost, this is interesting. If they can't cover that cost, we see the free market price signal. The way that works is a person says, does this item deliver value to me at this price? So if you think like, oh, let me get some M&M snacks. Okay, well, M&M snacks are $45. You say, well, wait a second here. That the value I'm getting from this snack, a very quick, short snack, not a lot of energy, not a lot of nutrients, and I'm paying $45, the price is not relative to the value that I'm receiving. Therefore, I'm not going to pay that price. And what happens is as demand goes down, that price will fall all the way down to its cost of production. And if it falls below its cost of production, that is the free market price signal signaling to the producer, hey, you are wasting your time and energy and resources in producing this specific good or service, because the free market is signaling to you that the value they receive is not worth the price. Therefore, reallocate your resources, create something, produce something that delivers more value that people are willing to pay a price above the cost, because that is the free market price signal signaling to producers that, hey, you're on to something here. And that's what countries are starting to learn right now. The value proposition of Bitcoin is number one, a savings technology. But number two, 24/7, 365 access to liquidity. Number three, easy, cheap, secure settlement anywhere in the world within 10 minutes. So these are really powerful value propositions to governments, states, cities, corporations, and even people. And that value therefore requires a price, and the price is always going to be set at the margin. And right now, that margin for cost of production for Bitcoin and my uh, algorithm, we have roughly speaking right around $60,000. So Bitcoin is right around fair value right now. And what investors need to understand is that the most important question you can ask about any investment you're going to make, not just Bitcoin, any investment you're going to make, is what I'm buying cheap or expensive? If you can answer that one question, you are going to be successful. Now, how do we answer that question? Well, it's always going to be market price relative to cost of production and relative to value delivered. So the Bitcoin value proposition, we know that people need a way to save and outpace inflation. We know that corporations and governments need a way to settle billions of dollars in a quick, cheap, easy, and secure way. So that value proposition is going to stand the test of time. But what price do we pay to access that value? And that's where the cost of production comes in. So when the cost of production of a value proposition that's going to stand the test of time goes below the market price, goes below the cost of production, that's what you call a discount. Now, a lot of your listeners will probably be able to relate this to real estate. If you could buy a piece of real estate for less than it would cost to build that piece of real estate, let's say you have a single family home, 2,000 square feet, and if you were going to source, if you had the means to source all of the materials and the labor and everything you needed, and it was going to cost you $250,000 to build that home, and you can turn around and sell it for $400,000, that's a pretty good deal. From the buyer side, however, you're paying $400 for what could be built for $250. That's a pretty intense premium. So you have to be able to understand that that price is expensive relative to cost. You know what? Maybe I'll hold off here and wait until that price gets closer to the fair value. Or maybe you find a home that goes on foreclosure. Somebody made a bad decision. The bank needs to recover. And now you can buy this single family home for $230,000. Well, you're getting it for a $20,000 discount to cost. That is a signal where you're saying, wow, I'm getting this asset for cheap relative to its cost. And that's when you want to buy assets. You want to buy assets when they're cheap relative to their cost. And you want to rebalance your portfolio when those assets are expensive relative to their cost. Having that one idea and mindset when investing will be the difference between whether or not you have to hope to be successful or that you can actually produce results.